All right. Good morning, everybody. Hope you're having yourselves a fantastic Thursday. You're feeling sharp, refreshed, and ready to go. Should be a relatively interesting trading day here. A lot of earnings, right, happened yesterday. We had FOMC, right, rate cut by a quarter basis point. So yeah, should be a good amount of volatility here this morning, or at least that's the base expectation. I mean, ideally, right, a little bit more than what we've seen in the last kind of like day or so, or 2 days or so. And hopefully, right, it's a nice trading day with a good backdrop, right, for us to take advantage of. Hopefully, everyone had an opportunity to watch the video there on the reference price yesterday. Yeah, so you can kind of get a better idea of how to use it, what it means when we're looking for a trade, all that kind of fun stuff. Feedback from it has been pretty positive, so hopefully it is helpful for you and your trading. All right, so today, not too crazy of an economic calendar, right? We got some Fed speak fine, not too worried about that. Tomorrow with the PMI, maybe a little bit more interesting with the 945 drop. Should be a reasonable AM with all that kind of context in play. So let's see what markets have in store for us here this morning. All right. We're going to be setting this up as a week 3 for 3 here to the downside this AM. Quote unquote doji, right? Increasing volume, and then this morning gapping up after actually making a new all-time high. So a little bit of an interesting backdrop there. We're looking, what, 69.60. That's fine. That doesn't need to change too much as our starting point. But to the downside, this is where things get a little bit spicy. So we're looking at 68.90. Right, as our starting point here, lower, 13 points away. So that might get taken out by the indicator. But fine. And 68.80. 68.70. Oh, it feels weird to type. Oh my gosh. All right. There we go. So we got a lot of space. That would be kind of like filling that gap effectively, right? If we could get there. So it would be fantastic, right? That'd be a nice amount of volatility. Buys probably is to the downside a little bit more this morning. But the volume, all things considered, especially with yesterday's FOMC, maybe not as big as I would have anticipated. All right. So NQ here, right? Green candle, increasing volume, gap down. So 2 out of 3 to the downside with volume. Slightly stronger narrative there. But we know that a lot of this is now going to be influenced by tech earnings, right? If Meta's a buy the dip type setup here this morning, that's going to be very tradable for us, or it's going to create like a nice little mean reversion effect that we can trade. To the downside here, we're looking 26,000. That's our starting point, and then we can kind of have it mapped out from there. I think it's reasonable for us to have a bias in either direction this morning. So let's see how it goes. All right. The old CL. I actually looked at a CL trade yesterday. Miracle. Green candle, decreasing volume, gap down. So 1 for 3 non-trending market. To the upside here, we're looking at a 60-50. That level is not changing. And then got a bunch of yeah, we got kind of have to be a little bit aware of that 5% restriction. So we're looking 57.50. So honestly, not too much is changing here. Probably push this to 58 just to be a little bit careful. All right, Apple, 3 for 3 earnings today. Tesla, 2 out of 3 to the downside. Without Microsoft, yeah, big earnings. beat on top and bottom line, so it must be the guidance that's suffering. We'll call this a 3 for 3, but setting up as mean reversion. Just historically, right, when you get such a big gap down or a big gap down on beat on top and bottom line, you end up getting more of a day of consolidation potentially, right, which is pretty likely, or like a mean reversion day, basically a bottom up gap fill. All right. Earnings today after market close and a 3 for 3 to the downside. Nvidia 3 for 3 to the downside. Looks like it wants to fill that gap. Pretty insane. AMD green candle increasing volume, gap down. 2 out of 3 to the upside with volume. Not exactly monster volume, but it's there. It's a binary. Meta, woo. Red candle increasing outlier volume, mega gap down. So again, right, 3 for 3 to the downside, earnings overreaction, we'll call it. And we'll say question mark. So mean reversion setup. Okay, Netflix inside bar. Google. Excuse me. Big gap up on this earnings here. It's almost 300. Wow. So 3 for 3 here to the upside. Oops. I would say that this is even possibly like mean reversion type setup, right? Even though it's a 3 for 3, those gaps love to get tested. And if you get a really big gap up post earnings, sometimes it kind of just stalls out, right? And gets stuck. VIX 16.65. So should be a little bit of volatility, maybe not as much as we would like, but should still have a little bit in store. Any questions here this morning? No, everyone good? How's everyone feeling? Love that, Michael. I got the same sensation here. And just a reminder, guys, right? If we're on Zoom, please use the Discord chat. Just because I will not see things. Hey, Christopher, well, welcome. Hopefully we have a good day. So yeah, we got kind of a mixed story, right, on the markets. We got some tickers up, some tickers down. We've got some volatility in store, some limited volatility in other tickers. So we've got a little bit of up, down, sideways, right? Bob's your uncle type price action here to a certain extent. So let's see what kind of consistency effectively indexes create for us here today. We can get ourselves a nice breakout day or good environment or whatever you want to call it, then it should be a pretty strong session. If we don't see anything, I'm going to try to be pretty cautious here and a little bit patient, I guess is the right term. Yeah, like I have a little bit of a milestone in my mind here. I'm going to try not to jinx it. So working towards, accomplishing that, being aware of it, managing my expectations of it. And hopefully, right, we can set ourselves up in a good way. Yeah, Tyler, nice to see Canadian baseball thriving. Nice to actually get a game that doesn't go 18 innings as well. Definitely makes it a little bit easier to be focused in the mornings. Who would have guessed it? Plucky Blue Jays would be knocking down the mighty Dodgers. All right. I'm just gonna grab myself quick. Oh my gosh, I'm gonna go grab myself a quick cup of coffee. Spend a minute or two, kind of just visualizing a successful trading day, get in my headspace where I want it to be, and then we'll jump back on and yeah, have ourselves a great trading day. All right, so let's get after it here. Let's see what the market has in store for us here today. I'm excited. I'm excited to see what kind of chaos NQ wants to create. So markets are opened. Trying to see basically how volatile or how big the opening range is to start. So we're gonna have to watch. Already a bigger range than what we saw yesterday. So that's an optimistic start. But we're gonna have to give this a little bit of time to settle in this morning and basically allow the divergent stories that we have amongst our tech names to kind of sort itself out, right? We've got a lot of names that are setting up kind of mean reversion looks here to the upside. A couple names are setting up mean reversion looks to the downside. And a couple names that are just kind of holding on to some residual weakness as they're creeping into their earnings window. So maybe there's not enough narratives that have been settled here yet for us to get a super smooth trading day. That would probably be like a worst case scenario, but we'll see. Can anyone else confirm if they hear an echo this morning? So it might just be you. I don't hear an echo or I'm not getting feedback of any echo. Well, yeah, really good size opening range, nearly 60 points. That's pretty strong. Oh, we'll see. We'll let it settle in. Oh, excuse me. I had a late night yesterday. I was up all the way to 9:30. I'm paying for it dearly here this morning. All right, so 30 seconds to go. I mean, it's unlikely that our second candle is going to be increasing volume, right? This is significantly larger than what we saw there yesterday on the 2-min. Same kind of scenario here with the 3, already a larger volume profile. So it's going to be a little bit more challenging. I'm up usually for about 5, Kobe, about 5. Okay. Again, we're probably unlikely to get increasing volume here on candle number 2. Good chance it happens on candle number 3. Same thing on ES. So we'll still watch him. I don't have a favorite time frame, to be honest with you, Michael. I just trade whichever one gives me a look that matches my daily plan. So whatever one gives me a setup, pretty much willing to trade that time frame. Yeah, pretty slow on that second candle here. So we need to see an increasing outlier volume. Again, if we get increasing, we will get outlier on this. As like a general rule of thumb, though, for anyone curious about time frames, the earlier in the day it is, the more likely it is for me to get a setup, on a shorter time frame, right? So first 15 minutes, even first 20 minutes, I'm much more likely to get a setup on the 2 or the 3 than I am the 5-min. So yeah, I'll end up watching the shorter time frames, probably a little bit more aggressively early on. And then if things kind of settle in and it's a slower morning, then maybe I'll need to rely on like the 5-min, or heck, even we talked about a 10-min setup there yesterday. So there's always some flexibility there, but what we're trying to do here fundamentally is identify what the trend is on the daily time frame and then find the first short-term signal that effectively indicates trending price action in that direction. So today, right, with tech earnings and all that sell-off, we can have a pretty reasonable argument that there is a trending market here to the downside, right, with that tech earnings, effectively with Meta being down 9%. And that's then going to push the indexes lower. And so then we're just saying, what would that look like on an intraday basis? Okay, it would be a high volume breakdown under the opening range. And we're looking for effectively those variants. So short term, right? We've got 2 candles on the 3, but we're on the third candle here on the 2. So I'm more likely to get that look on the 2-min candle than the 3-min. With that being said, right, we are going to close with that increasing outlier volume. So we do theoretically have a setup in place here now. We want to see a little bit of a fake out here first, right? See some sort of indication that bears have failed. Once they have failed, then we'll look for our entries. But right now, I just have this Fibonacci box up to visualize risk reward. Probably a little bit too prematurely to jump in this here yet. Like that little pullback there to 926, just to 026 probably wasn't enough. So this might end up having to just be a setup here now on the 3-min or potentially on this next 2-min candle. But let's see. Again, this one should go increasing volume. If it does, then we'll be targeting towards 25.9 because we're already under 26,000. Maybe that second 3-min also gives us that increasing outlier. But again, this candle should close before that 3-min candle does. So again, we'll have a larger and deeper sample size there. So NQ still the focus. I mean, she's my sweetheart. It's my focus all the time. So let's see. We still got, what, 20 seconds on this? Gosh, excuse me. Okay, so again, like I said, we're going to be targeting 900 here now, right? We're under 26,000. So next level is 25.9. Again, we want to see some sort of bullish failure first. Could be it. Yeah, that was a nice little rejection. So stop loss here would be 981. And reference price here would be 972. Call it 973. So send everything up here now. No rush, taking my time. Call it 982 as a stop loss. And let's see if this thing can pull in reasonably. We just closed on the 3-min as well. So we, theoretically do have a setup there if it comes together. Excuse me, still watching here. Doesn't seem to want to cooperate as much as I would like. A bit annoying, but that's okay. We're going to be patient. It's going to give me another opportunity here to set back up, so we'll have another chance. Not really a big deal. We're going to keep it as is. No point chasing this yet. That was just not a super strong candle close. So still looking at that 972 or 973 area. Might not happen. Time I say that, though, it bounces back. So we'll have to wait a little bit, potentially. Annoying. Just decreasing volume there by a couple contracts. Kind of just one of those scenarios here so far where I cannot get a justifiable risk reward to take the risk that I'm looking at. So got to maintain some patience here reluctantly. Okay, so watching here again carefully. No questions, please, at this point. And we're looking for a gentle pullback here, right? Gentle, gentle, gentle. Wouldn't say that this is gentle so far. That's a little bit better. Still not quite what we want. So still a little bit bouncy, fine. So same setup here still, right? Same setup here still. Oh man, 10 points feels like a big ask. It's annoying. Okay, still watching here, guys. Got close. 2 points. So watching here carefully. All right, guys, I am in 74.25. Stop loss at 82. Oh, I just got stopped. Annoying. Instant stop loss. Fine, we'll potentially try this again, or as now as a potential reversal scenario. Maybe I should have avoided that one. Is it going to close as a fake out or not? Yep. Kind of annoying. The now stop would have to be 20,000 or 25 or 26,000 effectively. That's a good fake out. Just a big one, an annoying one, but it is a good one. Ooh. Still a fake. Okay, so stop loss here would have to be 98. Okay, and this might be the fake out here now. If that's the case, reference price is there. We're looking for it to bounce back under. So stop loss 2601. And a little bit too fast of a move here. So at this point, I'm going to wait this thing out. It's not behaving how I would expect on a rejection. So this now might be setting up more as a mean reversion. And let's see if this, maybe one of these 2-minute time frames can give me something. So only been one trade here so far, Kellen. Only been one trade here so far. All right. Oh, squeeze mode. Two mins, like very light on volume. Three min might be a little bit better. This would be your kind of setup candle. Here would be your confirmation. Kind of combining the two here. Right? Because there's your reversal. It's highest volume of the day. It's kind of hard to ignore that. $271, very impressive. All right, so we are interested in this still. Target here would be high day if I can draw it out. Fuck me. And again, we want to see some sort of indication of bears failing. This is just going to squeeze. Classic. And guys, I want to remind you, right? We should not be afraid of losing as traders. We're going to lose a bunch as traders. So it's just a part of the game, right? Not necessarily a big deal. It's only a big deal if you make it one. Not to say that losing is fun or good, but it's a part of the game, right? So if this is now making you hesitate or it's making you nervous about the next trade, then you probably sized up too big on that first one, or something about your position sizing, right, is slowing you down or whatever it might be. But it should not be changing your ability to then be able to execute the system. If it is, you need to make a more proactive plan on how you're going to manage that. And generally, that starts with your position sizing. But the reality here, right? Yeah, if you're going to be a trader and you're committing to doing this for your career or to make some money, you're going to have thousands of losses left in you. So don't make one anything bigger than the next. Just a part of the game. Tracy, so at what point do you personally consider it a full-blown turnaround? I wouldn't necessarily think about it that way. I'm just taking it candle by candle, right? So this candle tells me that maybe a low was in, biggest volume of the day. So that for me is turnaround. If I then saw a big rejection here at this 68 and it was mega volume, then that would be a breakout, right? Or whatever it is. So I'm just looking at it based within the context of my system, and everything else is noise. Let's see if this 3-min closes with some strength here. 2-min again, interesting, but straight rocket ship post candle. So I don't really have a chance to take a stab at that. 950, 5-min just closed. I mean, similar idea to what we just thought about on the 2-min, but it's got a pretty dramatic pullback for a very large stop loss, which is not a good ratio. Yes, volume is the main consideration, Tracy. Right? I have no confirmation without volume. Okay, so again, focus up here now, team. We're going to have our opportunity to the upside again. And again, we want to see bears fail first in their attempt to reclaim control. When they fail, right, that then gives us our catalyst. So we're looking at an entry around 06 or 0550, stop loss of 94. Again, might be a little bit tough for us to get. So stop loss 26094. Okay, watch this. This could be the possible rejection spot again. Okay, so watching closely here. And I am in, guys, 98.25, 98.25. Stop loss at 92. Let's see if this thing can keep pushing. So far, so good. Fantastic. Keep going here. There it goes. So fantastic here so far, team. So far, so good. Oh, don't like that little rejection. So I'm going to look to try to close here as P&L is increasing now. All right. I'm out, guys. I am out. Exit price 118.25. Didn't like that little rejection, so I will get impartial and try again. That's a nice little win there to get us back to where we want to be. Good little process, tidy little win. I'll take that all day long. And good decision, I think, to close already where we did. We will always have the potential to try this again and reset. So 20 odd points. I will take that all day long. So quick little $1,600 win, right, to start to bounce back there. So really strong little recovery. That's exactly what we want to do. Now we're going to possibly try this again. What was your stop loss, Dave? Should not have happened. You should not have gone stopped out on that. Like it hit 98, but it didn't hit that 92, right? So not sure how that happened. Yeah, so stop loss needed to have been 92, right? Sounds like you didn't. No offense. Well, your stop loss didn't trigger when it went under 92, right? So you didn't have a stop loss at 92. You had a stop loss at whatever the number was. The low of this candle was 93, 92.75. So spread would not have crossed. So I'm not sure how that happened. Nice work, Kiki. Are you done? You're up 1,200 on the day, Sonia? Take it and run. Go enjoy your morning. You're kidding me? It's not even 10 a.m. Go enjoy your morning. Absolutely. Nice work, Nick. All right, stack them up. You need a few more of those days to be nice and green. I appreciate that, Sonia. But guys, I'm always open to making more videos or giving you guys whatever content you want. I got zero problems doing those things. I actually like doing them. Let's go, Matilda. Well done. 1,300 bucks is fantastic. Congratulations. What was your sizing on that first one, Patrick? So at this point, we're just going to wait for 10 a.m., right? We're going to wait for 10 a.m. a little bit here. Yeah, fair. Okay. Journal it, study it, right? Ask yourself, what could you do better? And you'll be all right. Yeah, good man for catching yourself. Yeah, I do think it's time to fill up my coffee. So, guys, I'm going to be back in 2 minutes or less. We'll see if something sets up here at the 10 a.m. data. All right. So sitting on about 1300 here this morning. Not too shabby. Not the best looking. There's a little bit of a fake out lower though. It does seem like we are poised for a little red to green reversal. Love that setup. Probably my favorite setup to trade, honestly. So let's give it this extra, I don't know, 30 seconds here, whatever it is. See how this thing closes, and then we should have ourselves a nice little catalyst. We're either poised to break out here, right, or we're poised to reject. So to be determined. No active setup. I'll just be a little bit less sloppy with my charts. A little bit bouncy, but still just looks like a fake out, right? I'm not sure if I need to be scared of this. I could theoretically play this as my confirmation. That's good follow through. Yeah, but honestly, guys, like those fibs, people overthink them. I am using them to visualize my risk reward ratios and so that you guys can see your stop loss, right? Or what my stop loss is going to be. So it's mostly a tool I use for visualization, not anything I actually do any analysis off of. So Fernando, no clue on position sizing here yet, as I don't have a active confirmation. So still need a little bit of time prior to being able to give you that information. Uh, to be honest, though, right, with your guys' position sizing, you need to be selfish in that, right? Everyone has a different number that breaks them. And if I lose 500 bucks, right, I might be totally fine. But if you lose 500 bucks, you might go on tilt. So to a certain extent, position sizing is an incredibly like intimate or personal conversation that you need to have with yourself. I'll tell you guys what I'm doing and what my sizing is, but that doesn't mean that that has to be yours, right? The objective here is for everyone here to be proactive and to making decisions that protect their mental capital. Realistically, if you're just chasing and copying someone, then you're probably not thinking in ways of protecting yourself. And it's going to work really, really well if we're making money. But the second we have a loss, you're going to start to trigger some terrible emotions. And we want to avoid those sensations as much as possible. So the only way to truly accomplish that is to be proactive, not reactive, which means knowing what your max loss number is and then, working backwards to find your position sizing from there. Not really anything I can do with that. So keep passing on the burden of confirmation here. CL just a mess. We're not going to get increasing volume here on the 2-min. We didn't get the right candle close on the 3. So pretty much the only thing I have right now is on the 5. And then this would be a setup for a move down towards low of day again, or that sort of area. So we wait a minute to go. Love that, Mike. Appreciate it. All right, so 15 seconds here. Let's see how this closes. Same thing. We're going to want to see bulls fail now in their attempt to reclaim control. Should be pretty easy for them to do. And so again, we'll just be targeting the 2R range here. So far, we're only seeing elevator up, not really like trampoline rejection here. We're still waiting. No need to rush anything here yet. Yeah, and there's another elevator up. And another. So this might be setting up now for a fake out above previous high a day. Wouldn't be too surprising. I go 155. It's a pretty big stop loss that would be required. You know, as is, you're still almost pushing 20 odd points. So it'd be like a 1 contract play. I think I can get tighter risk reward than this, personally. So still no reference price, right? So we're still waiting. I still expect this to make a higher high relative. So still just waiting. We got a bit of time here. No rush. we're sitting on a nice green day, so we don't need to force any decisions, right? We don't need to rush into any trades. We don't need to trade with our P&L here. We just got to trade our system. That's literally the only thing that will make you money. Being consistent in your process and learning how to regulate your emotions is the formula you need to be a successful trader. There's pretty much nothing else to it. And so again, we should be back in business here in a second. And I don't need this candle to go increasing volume. This is still my confirmation. This has not invalidated my thesis. It just has not given me a clean entry. So I don't need to chase it. Right? It hasn't given me an entry that follows my rules. So I'm not interested in compromising. Ten seconds. Let's see how she closes. Three, two, one. All right, looks fine. I don't know why I did a countdown there. So for now, stop loss would be we'll call it 101. Might not get a chance. So again, we want to see a little fake out higher, right? Bulls fail and then can jump in. If I don't get it, I don't get it. No worries. Having a setup is fun. Having an executionable edge is better. Okay, so let's see if it gives us a little fake out above that 100. And then we can go from there. So just like sizing that's required to execute this trade doesn't make a ton of sense for me yet. So let's see if this gives us that little fake out. This is why we don't chase trades. We wait for them to behave exactly how we want. You'd be so stressed out, right? If you chased it at 75 and now it's pulled back to 90 and you're like, what the hell is going on here? So we're trying to avoid that sensation as much as possible. And the only way to do that is to be proactive, not reactive. Right, so that means proactive and making it easy for you to follow your rules, not being reactive and just chasing the feelings that price is trying to give you. Those are mostly bullshit, so we can't trust them, can't listen to them. I have no increasing outlier volume bars here on the 2. I have 0 on the 3. So I'm pretty much confined to only looking at this to the downside on the 5-min right now. So it feels a little bit restrictive, maybe. But is what it is. So I'm kind of constantly switching between these time frames to see if I can find another increasing outlier volume profile to see if I can get a tighter risk reward scenario. That's what I'm looking for here, because it seems low probability that I'm going to get that reaction that I want right at that 101. So now I got to tighten it up, see if something else wants to come together. But seems maybe a little bit unlikely. So still watching for now. Like the second time it's rejected off of like the 90 area pretty well. That's nice to see. There's another one potentially. Okay. Oh, what a life. Okay, there's that possible fake out we were talking about. I'm going to let this candle close, right? Still a lower low, still a lower high. It's still decreasing volume. Quick little sandy check. Looks fine. So now let's see if we can get a little fake out above that 120. Again, right? We're just going to be challenged for position sizing here. Like I could theoretically find an entry, but I'm going one contract, 20 points of risk. Not worth it. Or it's like a bad risk reward ratio. Or maybe not bad risk reward ratio. It's a bad margin of error ratio. That's probably a better way of describing it. Dan can't trade this on the 2, not enough volume. Right now I'm a little bit stuck. Fine is what it is. It's life. Nice, AJ. Congratulations. What a trade. Go enjoy your morning, man. Well done. Oh, I mean, what a typo. How dare you? Congratulations, dude. Very well done. Yeah, it gapped up a ton on its earnings. We're still kind of, unfortunately, still relying on the 5 min. I don't know, kind of a positive, I guess. It is slowing us down, which is fine. It's just doing so in the most annoying way possible, where it's not giving me any tradable looks as it kind of rips around 30, 40, 50, 60 points. Patience is a fickle mistress. All right, so we're still going to have to wait, unfortunately. So 90 seconds. Let's see how it behaves. Okay, so again, we're looking here for the downside. This candle continues to be our signal / our confirmation. All we're trying to do here is to find an appropriate risk reward ratio to justify taking this risk. So let's see, we have a chance here, early doors for that possible bullish failure. Put my stop loss at 57. Terrible. I have my reference price here to be in the 50s. So 57 would be the stop loss here, guys. And we're just going to be patient. 057. Okay, just be deliberate here. Be deliberate. Too fast. Way too fast. Okay. So now we're setting up like this. So 69 would be the stop. And then, never mind. Now it'd be 73. Now 80. You call it 79. Set it up like this. 079. Okay, so let's pay attention here now, please. You want it nice and slow into that entry zone, right? We've seen it kind of jump and bounce like a lunatic. Don't want that. We want it to be patient, right? The whole idea here is that when price action gets that bouncier, it moves that quickly, or it does whatever, it wants to trick you into making a decision. Like that pullback, far too fast, right? Went from 50 to 70 in half a second. That's far too fast for me to want to take that risk, right? It's like it's luring me into chasing this, which I don't want to do. I want to exert control over that. That's a little bit better. Don't overthink it, guys. We don't need to apply a definition. It is literally to control our psychology, right? If I enter a trade chasing it because I feel like I'm going to miss it, I'm going to make a lot of other mistakes. So don't overthink it, guys. We don't need a definition for everything. It is just to help us manage our psychology. All right. If I chase an entry and it doesn't go my way, I'm going to feel like shit, right? If I chase an entry and it goes my way, I'm going to feel greedy. So we set ourselves up, right, to make entry decisions when price action is being controlled, right? Or it doesn't feel as if it's pushing us in a certain direction, because that allows us to exert more control over our own personal decisions. That makes sense? Like, guys, just to be clear, right? Every decision that I am making intraday is a proactive decision to protect my psychology, right? So it's okay. I have my trading system, I have my rules. I know that they will make money if I follow my rules. So, how can I make it easy for myself to repeat my process over and over and over and over again? If I put myself in situations where I have to make a lot of emotionally charged decisions, I am not going to make a consistent routine out of that process, right? So everyone, I would say the vast majority of people are thinking in ways of how can I make the most amount of money? And then they get stuck in that thought process, trap themselves into making dumb decisions, and then never find any consistency because they're P&L hunting. Not P&L hunting. I'm going to let my rules and my system take care of that. I'm trying to make it easy for future Michael to not be stressed out. That is it. That is my literal only priority during the trading day. So we got to rewire our brains here a little bit, because being addicted to making emotional decisions is a very expensive way to trade. So if I can avoid making an emotional decision, I'm going to be in a lot more control. If I'm in a lot more control, I'm going to be able to execute my plan better. If I execute my plan better, I'm going to make more money. That's it. That's the only criteria I have for myself. So if you want to chase an entry as it's moving really quickly, sweet, go for it. Happy days, good luck. But you're going to be putting yourself into very many needlessly expensive emotional decisions, and that's going to get very expensive. Like, everyone is looking for the holy grail strategy that's going to fix all their trading problems, instead of just looking internally and fixing all their trading problems. Right? The market does not force you to place a trade. You trick yourself into placing a trade. So why not be accountable to yourself and study those reactions instead of thinking that, ooh, this time will be different? So we're still looking for a downside setup here, right? Nothing has invalidated that 10 a.m. rejection. We just haven't found a very clear entry or a clear opportunity to get in yet. Fine, right? That market's going to do that to us all the time. A trade can move in our setup's direction without following our rules perfectly. So it's about remaining in control. If I remain in control, I will be green. Maybe not green every day, right? Because that doesn't exist. That's not possible. But I'll finish weeks in the green, months in the green, and most importantly, years in the green. And that's the ultimate way to judge yourself as a trader. Your daily P&L is effectively bullshit. So we can't trust the signals that it gives us, or the dopamine that it gives us, or the confirmation bias that it gives us, because that just charges you into making more and more emotional decisions. And when you make emotional decisions, you lose control. And when you lose control, you blow your account. It's that simple. If anyone thinks otherwise, good luck to you. But trading is a psychological game disguised as a technical one. You cannot fix your psychological problems by learning a new technical strategy. You'll just keep finding new ways to make the same mistakes over and over and over again. Kind of a weird or like annoying form of volatility here today, where there's like a good range but very minimal tradable opportunities within it, or at least for my style. So again, right, it's requiring me to be deliberate, to be patient, to acknowledge that maybe it's not a perfect day for my technique and force myself to slow down, right? Well, I still have an active setup from 10 a.m., Clint, right? So we've got a reversal signal and we've only continued to make lower lows. So I'm looking for a continuation here of some sort of downside narrative. Okay, so we're possibly looking here. Stop loss would be 58 for now. Possible little inside bar fake out, right? Occurred on that last candle. So we are watching this. Stop loss would be 0.58. Short, right? We're looking at a short. And again, same thing, same rule we've had all morning, right? As it goes into our entry zone, we're making sure that it's moving slowly, that it's in control, that I'm not getting tricked into making a decision, right? Chasing a very quick moving candle is also a pretty easy way to just get slipped to death on your entry. And that's a very expensive way to trade. So no entry on that, no chance at that. That was too fast. And if a trade is strong, it'll give you multiple chance to enter. So let's fuck off with your FOMO. It's so annoying. It's so unnecessary. So be deliberate. Okay, guys, I am in average price 53.50. Stop loss at 58, which I just got stopped out on. This might be a little retest opportunity here. We'll try this again. Too fast. So now stop loss would be 65 more, 66, 67, 69. Okay, watching here carefully. Reference price would be 60 here. That's a nasty little fake out. What was my fill price on that? 53. Nasty little fake out. Okay, still watching here. And we'll call stop loss just be 70. Just to keep the math simple. Okay, still watching here carefully. Okay, fine. Again, watching here carefully. A little bit too fast so far, a little bit too fast. That might have been the fake out there. So you're looking at a 75, a 68 reference. So 76 stop. Nice work, Mike. Ruthless with how it's moving. Again, we got to be very, very deliberate here. Don't need to chase dumb shit. We're still sitting on a nice green day, right? So we're here to not make things worse. If you're green, if you're happy with how your day went, if you're tired, if you're whatever, shut down your account and go enjoy your day. Be proactive. The amount of times I get messages from people who are up like $1,500 on the day, and then the stream ends, and then they spend all afternoon trading and giving back all their money, and then saying, "Woe is me, I can't believe I'm such a bad trader," is infuriating, right? Take your money, run, get out of the market, go enjoy your life, optimize for freedom. Make it easier for yourself to be green. Nice work. Am I ever going to get increasing outlier volume on these shorter time frames? Golly. Barkley, you went long there, not short? I'm confused. It doesn't make any sense. In at 47.75, out at 65.50, 710 profit. That makes no sense then. Maybe the other way around. All right. The other thing you guys need to realize here, right? And this is just to build off of that previous comment I made. If I felt as if I had an edge in the afternoon or a edge trading the power hour market or the lunchtime market or whatever, I would trade it, right? I would stream it. I would be here trading with you guys. I don't have an edge in that time period, or at least not an edge worth executing. So I don't do it. So I don't know why people think that they'll be able to find the difference or whatever. And I don't understand that. Honestly, it's a form of self-sabotage, right? It really is a form of self-sabotage. Over trading your P&L because you're not happy with $1,500 is a really dumb decision. Really, really dumb. Take your money and run. Turn green days into green weeks. Turn green weeks into green months. Turn green months into FUs to your boss. That's the game we're playing here. Don't confuse it with anything else. Okay, so still interested potentially on a 68, or 69 entry. All right, I got no issues with that. Yeah, as a trader, you get paid for your decisions, not your time. Like your job as a trader isn't to trade, it's to collect data, study the market, and figure out how you can change your behaviors. That's your job as a trader. So I don't get why people confuse that. But just because trading is more fun than your day job doesn't mean you need to compromise your financial potential just to feel alive. So we're still looking here, guys, right? So time to focus up. And if it pulls into that blue line, I'm going to give it a second here, right? So there's a possible little fake. That would set my stop loss at 78. Come on, pull into my zone here now. Come on. Too fast. So now stop would be 84. Hey guys, I am in 80.75. Sorry, that kind of ran instantly. I apologize. 80.75. Let's see if this thing can crack. All right, I'm out. I'm going to reset this and try to get impartial. I felt early on that, so I'm just going to take my $300 and try this again potentially. So again, we're looking at an 84 stop loss. Did feel early, so let's see. Yeah, that would have been the stop loss. Okay, good decision. Let's see if this is now printing a reversal somewhere. Nope. All right. So still going to wait this thing out. That was a really good decision, guys. That was a really good decision. 80.25, felt early, closed before stop. Good decision. Really good decision. Okay, so not a fake out on this candle, right? So probably worth talking about why I felt uncomfortable with that trade, right? Or why it didn't behave the way that I expected. Upon entry, right? Entry at 80.25, it like jumped down to 74, 72, 76. Like it moved to that area very, very quickly. And then it's like it got stuck there, right? It couldn't get through. It kept then bouncing off of that almost like a trampoline. So the trampoline range was almost like there was a trampoline at the bottom and a trampoline at the top, and it was just smacking each other. So that means, right, that I hadn't necessarily gotten the bullish failure that I expected because bulls were defending 6 or 7 points below my entry. And once I see it bounce back and bounce back with what I perceive to be the same speed as the initial reaction, then I need to get out because I don't have control yet from the side that I'm looking to bet on. Right? So if a trade is strong and it makes a quick move, it's not going to get stuck at its first point of resistance, right? It's going to be able to get through that barrier. So if it finds an excuse to get stuck all of a sudden, I kind of want to tell it to fuck off, right? For lack of a better term, or like I don't want to be in that trade anymore because it's not behaving how I would expect. Again, doesn't mean we won't get another setup, right? Like we have another look here now on the 2-min time frame, increasing outlier volume, right? Separation away from the opening range, and we'd be targeting effectively the low of day, which is 950, so about 100 points. So we'd be looking at a 72 stop loss for now. I'd like to tighten this thing up, get within at least 10 points. So I'm going to set this thing up again here. So I'll call it a 70. I was going to go 73 on my stop. If it runs without me, I don't care, guys. I really don't care. It's a nice green day. I don't give a shit. I am trading my system, not my P&L. The P&L is honestly a bit of a liar. I know I've said that a lot. The theme I've been trying to push, right, is that your P&L is fake, right? It's the same in your eval account as if you were paper trading. There is no difference. So any difference that we impose ourselves is purely psychological, and we need to learn to control those variables, right? To not make them a big deal. To pretend as if we don't care, almost like fake it till you make it type thing. And that's the objective, right? Control your behaviors, control your emotion, and you will control your P&L. And I'll be honest, I got a lot of self-imposed pressure trading today. So I'm trying to be very, very deliberate, right, with how I'm managing my psychology. That's the thing I am being most proactive about here. I don't really care about the setups. I mean, I obviously do, but it's my ability to control my emotions, to control my expectations of myself, to do all those things that are going to drive a lot more P&L for me here today. That's my emphasis. That's always my short-term goal. And especially, like I mentioned, right? I really am, maybe desperate's not the right term, but I'm really keen to have a perfect month. And so I'm making sure that I make good enough decisions so that is possible. Okay, so I'm watching here. Stop loss would be 57. Moving a little bit too quickly for now. Should be patient. Yeah, that would have been the stop. So now stop has to be 64. All right, so watching here carefully, guys. Oh, that was weird. All right, so I am in 58.75, 58.75. Stop loss 64. Beautiful. So far, so good. Much better reaction this time. Let's go, team. This is a fantastic follow through here so far. Let's see if we can get one more flush here through 40. Otherwise, I got to be careful about this pullback. So let's see if it happens here. There it goes. A little bit bouncier maybe than I would like. There it goes, guys. There it goes. So now I'm really focusing on closing as P&L is increasing. And I am out. Exit price, $34.50. $34.50. Let's go. Huge trade. Maybe early, but I don't care. I'm going to take my 4R and run. That was an awesome win. I do have a correction on my fill. It was $32.50. Fill price of $32.50. Oh, that's a good feeling. Right? You control the variables you can't control. You manage your psychology. You put yourself in a situation where you can make good decisions. And then if you focus on that, right, you're always one decision away from being green. That's it. We've taken 5 trades here so far today. 1 loss, 1 fake out, and then some nice wins along the way. So awesome session here, guys. Awesome, awesome, awesome session. We'll see if we got something else here to come together. Everyone green? Let's go, team. Nice work. Who's got the high water mark on the day? Nick, you got to train your dog into being a better risk manager. Guys, we had plenty of time to set up that order, right? So I don't necessarily like the excuse of move too fast. We had lots of time on that. Okay, we're setting back up here for a possible short. We want to see this thing reject first. I disagree with that. Do not jump in without warning. I disagree with that. Okay, so we're looking at a 2607 stop loss for now. You're looking at something like that. Now, again, if we pull into that blue line, wait, right? Be a little bit patient here. See if it moves slowly. Make a decision based from a position of control, not a position of desperation. Too fast, way too fast. So now we're looking at a 13 and the reference price of 07. Call it 14 as a stop loss. Just keep the numbers simple. Kind of a ruthless market if it's faking out the fake out. So we got to be patient. I guess I could do this theoretically. Ooh, too fast. Okay, so stop loss here would be 997. Let's see how this thing behaves. A couple more points to pull in. Close. I saw 88.50. Again, watching the speed of this thing as it pulls into my entry zone here. Probably a little bit too fast. Okay, you're looking at an 04 now. Too fast. Okay, at this point now we're setting up for a possible reversal, right? Increasing outlier volume, clear fake out lower, so no downside setup. Now we're looking for a move to the upside, right? It'd be a 2602 stop loss. Reference price here, we'll call it 010. Okay, that little fake out. It'll be at 2601. Come on, give me a gentle pullback now. Come on, I believe in you. Oh, come on. Could not find my entry there. It's really annoying. Again, we'll try this again here potentially. Hey, well, congratulations, Renee. Green is green. Go enjoy the rest of your day. Okay, fine. Still in play here. And we get that little fake out under 15. Every now and then, this fib tool is so finicky. This would be like a 2 or 10-point stop loss. We'll be looking at like 2 contracts. Again, I haven't really seen that fake out lower, which is slowing me down. A good reaction off of the quote-unquote entry zone, but without that fake out first, or without that bullish failure first, I'm struggling to trust this just a little bit. Probably the wrong decision based on how it's moving. Fine, reset, get impartial. 30 seconds here. What happens still? Again, if it does pull into that zone, nice and slowly is what we're looking for. Close. It's capping pretty quickly here, guys, on this next candle. So please pay attention here. Close again. No way I missed it at 23. Oh, fuck. Now we're trying to just get big stop losses. That's a little bit tough. Ah, it's annoying though now. Keep resetting. Can't trade this on the 3-min time frame because no outlier volume signal that I can rely on. So we're stuck on the 2 for now. Again, this still candle at 1056 is continuing to behave as my confirmation. Since that confirmation candle printed, the move has behaved how we would expect, right? It keeps making higher highs. We keep getting strong green candles. We keep getting nice quote unquote opportunities. Oh, it maintains its standing, I guess. Reference price here would be 56. Again, we still want to see that little bit of that bullish failure first, or sorry, bearish failure first. It is behaving pretty well here. Stop would be 45. Is this the fake out spot? Let's see. The stop would be 43. Lower now. Lower now. $38. Lower now. Fuck me, I sound like I don't know what. 33 would be the stop loss. This here is my reference price. Too fast. Better. All right, guys, I'm in. 36 on the dot. Stop loss 33. Just got stopped out. Couldn't even finish saying it. Second time that's happened today. Try this again, potentially, if it behaves. So stop would now be 27. Not the right time for that question right now, Clint. Focusing too much on an entry. Don't have the time for that. Not appropriate. Okay, guys, I am in. Kind of a shitty fill. 33.50, 33.50. Let's see if this thing can push. Got 4 contracts on this. Hey guys, I'm out. I am out of this trade. Exit price 34.75. I don't like that little fake out. I'm going to try this again. Felt early, maybe prematurely, but felt early. I talked myself out of that. That's on me. Fuck. Wrong read. A bit annoyed by that, actually. Annoyed by that one. It's all right. I mean, 4 for 7 is not terrible. That one, I feel kind of dumb for not doing a little bit better with that one. That's fine. We'll reset this. Try again. Not a big deal. And a little reset here, right? Posture, breathing. First things to sandy check. Okay, so again, we want to see a little fake out here. Reference price would be this. So we got to see the fake out first, right? If it doesn't happen, it doesn't happen. I'm okay to take my win and run. Been a good day. Nice work, Nick. Still waiting. We haven't seen that fake out, so don't fall in love with this reference price. There's that possible fake out. So now stop loss would be like 52. Oh, 5-2. And see if we get a nice tight risk reward here to justify taking a punt. Okay, let's focus up here. Okay, we're close. Watching carefully here. Come on. Hey guys, I am in shitty fill again. 57.50 on my fill. 57.50 on my fill. Stop loss 52. I don't like that fill price. That's bothering me. Okay, so far so good though. So far so good. Come on, rocket chip, please. You can get over 70. Beautiful. Come on, one more pop. I believe in you. I don't know if I like that reaction too much. So looking to get out here. All right, guys, I am out. Disappointing trade. Exit price 58.50. Fuck. That one's disappointing. Right, again, right call to get out, but disappointing on that one. How it rejected off of 70. That kind of fucking sucked. Let's go, Patrick. Well done. All of a day, man. Congratulations. I made $80 on that trade. Last couple. Yeah. I hated my entry. That made me feel weird things. My journal's so weird sometimes. Nice work, Tony. Good job, Kellen. Well, sounds like you've made a good decision there today, Patrick. I like that. All right, how's everyone feeling? Everyone green? We should have lots of green here today. 5 and 3. Let's go, Michaela. Nice work. Hey, appreciate that, Tyler. So, Clint, you asked me about what makes you decide if it's enough of a bearish fake out for you to go in. So, it's just a binary, right? So a fake out is anything that moves under my whatever target low, right? So right now, a fake out would be any move that bounces under 26,044.75 and then gets back up above that price. I don't really care if it goes down to 44.25 or if it goes down to 29. It's just a binary. It needs to get under that price and then bounce back above. The main thing I care about here is basically the speed at which the bounce back happens. So I almost want it to look like a rubber band, right? Where the rubber band, when it makes that fake out, kind of squeezes lower. And then once it is at its max place and is let go, it bounces back right to its original spot, or like catapults back to its original spot. So that's more what I'm looking for at the fake out, or if a fake out occurs, and then that becomes a binary. So either we make a lower low under the low of our confirmation candle or whatever the reference is, And then we're looking for that rubber band bounce back. Say that 10 times fast. And that's the reaction we're looking for. So I don't care how big it is. I care about, do I see that rubber band snapping back into place? Let's go, Ajay. What's the P&L on the day? Let's go, man. $1,600. Congratulations. Hey, Christopher, congrats, man. Some nice wins. $1,500. Let's go. Good day here, team. Good day. Love it. The main concern I have is we're dealing with the smallest volume of the day at this point. Excuse me. Get the hiccups. So that does maybe slow me down a little bit, right? Where maybe now I don't have a ton of expectation of getting super easy follow through. I can't not see this as the bear flag, or sorry, as a bull flag. I can't not see that. So I'm still a little bit interested in this. The disappearing volume would make sense within that context of consolidation. But I would need to see that volume return here pretty quickly and pretty aggressively for me to have confidence that we would move back up towards the current high of day. All things considered, it's been a pretty sharp session. Some nice wins, some good decisions, some sloppy entries for sure as well. I won't disagree with that. So really, really strong day here so far, guys. Really, really strong day. Sitting at about 2750-ish, 2750-ish on the day, P&L wise. So I do feel like we've navigated this reasonably well, and we've done a very good job here of keeping our losers small, which I think is fantastic. So for sure, feeling pretty good here this morning. Hopefully everyone is too. And again, right, we're optimizing not for P&L, we're optimizing for control. Yeah, walk away, Nick. $1,100 is a great day. Don't be a chasing asshole. It tends to always work against us in everything we do in life, pretty much. The YouTube is not 12 seconds delayed. That is a you problem at that point. So please make sure that you have live clicked and all of those things set up. There is a Zoom link. You can reach out to your DTR advisor. I'm sure they'd be happy to send you that. But the YouTube latency is not 12 seconds. The setting that I stream on with YouTube, as advertised on its servers and its literature, is a 1 second latency delay at most. So this excuse of latency, it's because you don't have something set up correctly here in your live stream. Yeah, it's not 12 seconds. Love that. Appreciate the feedback, Nick. Love that, Tyler. Congratulations. So your dog's outside then, waiting for you to take him for a walk? And it's not enough volume for me to want to chase any of these moves yet. or a secondary whatever chase of these moves. I appreciate that, Hank. Well, question to ask yourself, right, is how can you set up next time, or how can you be better prepared next time so that you don't feel slow? Now, the other element of it is you just got to practice your executions, right? You got to get comfortable firing out a bunch of order windows, because when we get in the heat of battle, things can change very quickly. And so just having that muscle memory that you can rely on when you're watching trades, and you can almost do it subconscious, that's the sweet spot you want to get to. Oh, it's days like today that I'm very grateful I don't have to have a day job or like a real job anymore. Feel very blessed. Hmm. I don't know if it's my longest streak of my career, but longest streak of the year for sure. I don't, Hank. I don't. I never feel like I'm working when I'm trading, or it never feels like work in hindsight. Sometimes I can get fucking annoyed in here. I mean, I don't know. I don't track those details, or I like don't remember them. So good chance that it is, good chance that it isn't. I don't know. I just don't get I just don't think about those things, to be honest with you. I just like don't keep it in my head. Yeah, it's the freedom, Tony. It's the freedom. Like, don't get me wrong. I didn't feel like I had a job when I was working institutionally. Like, I did not feel as if I had one back then either. There were times where I did, and times where I hated going into the office. But the I would say the thing that has been true for me for my entire trading career is that I have always felt as if this is where I should be. So, like, I started trading when I was in law school, and it was at like a physical prop firm, so like one where you had to pay like desk fees and stuff like that. And the first time I ever saw it, and like just stepped onto a desk, I knew right there and then that that's what I wanted to do with my life, or like that's what I was supposed to do with my life. And that feeling has never disappeared. And so for that, that's why it doesn't feel like a job, because it feels like I'm pursuing my calling, I guess. And it is something that I'm extremely grateful for. When I talk to my friends, when I talk to other people, they, yeah, I don't know too many people who have that same luck in life, I guess. So I feel very blessed. Like, it's the thing that I'm eternally most grateful for. Excuse me. I don't know if I'm making another entry here. I don't know if it's worth taking another entry here. Maybe a better way of describing it. Let's go, CD. Well done. That's a nice little day. Excuse me. I'll give this a few more minutes to see if we can get that outlier volume on either breakout or breakdown of this quote unquote flag. It may even be something like this. It's probably a little bit too aggressive. Well, let's see if we can get that outlier volume to show up. If not, I'll call it for the day and enjoy my afternoon. Well, it's still morning. It's only 8:30 here. Oh my God. That's so hard to get used to. It's 8:30 in the morning. I'm West Coast. 4, 3, and 5 so far. CD today. 4, 3, and 5 has been the ratios. Last 2 trades have been 5 contracts. The big win was 4, so the second big win was 4. The first big win was 4 as well. I had a couple trades here where it's like less than 5 points of risk. If I can get less than 5 points of risk, I'll go 5 contracts. I generally won't exceed that number as a starting point. Oh, don't get me wrong, Kellen. I love the well, it's just how much space do I have right between my reference price and my stop loss price. And so my objective is to keep my max risk per trade to be about $500. So just depending on how big that difference is will depend on my position sizing, right? If I've got a 10-point stop loss between my reference price and my stop loss, well, then each contract I'm risking $200 on NQ, so I can only go 2 contracts. But if I'm risking 5 points, then each contract I'm risking $100, and I could do 5 cons. So it really depends. There's a lot of videos in the Discord that break down that process or that technique in more detail. So I would recommend reviewing those. But for me, right, my objective with my trading is to keep my max risk dollar-wise to be the same regardless of how wide or how big or how tight my stop loss is. So that allows me to smooth out a lot of quote-unquote P&L variance because it ensures that I don't oversize on my losers or undersize on my winners. My sizing remains constant. And so that makes it a lot easier for me to play that numbers game. And so that's the obsession. So the thing to almost like worry about almost for yourself, I don't know if that's the right term, but everyone has a different max loss number, right? Everyone has a different number that breaks them. It's probably less than you think. And so it's about being proactive, not reactive in that process. I mean, I would not consider myself a newer trader at this point, Kellen. But yes, back testing is a very important part of my trading. Look, my trading journey is maybe a little bit different than a lot of people here because my first 7 years of trading effectively, I spent that time working institutionally. So when you do trade execution for a hedge fund or a bank or a pension fund or a family office or whatever, um, you're like, I was 20 years old, 21, 22, whatever, when I started that job. I'm not allowed to take risks. I'm not in a risk taking position. So I wasn't trading the way that I am now, right? I wasn't deciding, okay, I think that this is going to go to the upside. So let me jump in. I would get instructions from my portfolio manager or our algorithms. And my job was to get a better price than our suggested ideal price, right? So let's say that I was trading Apple and my job was to buy $40 million worth of Apple, and the price that we wanted to get was 271. My way that I could add value to the firm would be getting fills below 271, right? So getting that average price to be lower than the recommended price. And so that was the element of risk or risk taking that I effectively had, at least for the first few years of my career. Once I started to kind of like show myself, improve myself, then I could suggest ideas and introduce concepts and go through the whole like vetting process of trading a thesis. But again, it would never be the same speed at which I do things now. So if I saw an idea, I saw a pattern, I saw a correlation that we wanted to take advantage of, I could raise that to my portfolio manager. He would raise that to the quants, or I would raise that to the quants. They would run a few tests, confirm if it was correct, and then go from there. And so that would then be the process. As I transitioned to trading my own ideas full time, or transition to trading retail, I needed to do that back testing myself. So it is something that I do, quite a bit. Maybe every couple months, right? Look through, see if you can find a new pattern, see if you can find whatever, and you test it. The reality with trading is that it's kind of like a constant evolution. So as your skill improves, you start to see things in the market that maybe you didn't see 6 months ago. And when you see those patterns, you want to go back test them and see if they outperform how you're currently trading. From there, the most important thing to then do is effectively the stress test, right? Because finding a pattern that you can back test and theoretically make money on is different than actually making money in reality, right? So sometimes the way that things look when you're back testing don't necessarily match the reality that you'd be able to get when executing trades. And so creating a small proof of sample stress test effectively to see if you're matching your performance of your back test, then kind of goes there. So that's a process that happens consistently. And then it's just evaluating your stress test results, right? So how did my trades go? Are they behaving how I expect? Am I within variance, outside of variance? And then scale up from there. I would say that probably once a year, I have like a really steady week of like very heavy back testing where that's pretty much all I'm doing. And I'm trying to see if maybe I'm leaving something on the table. And then maybe every, I don't know, maybe every quarter or something like that, or every couple months, I'll have a weekend where that just ends up being what I do. And I just don't end up finding anything that's like super, super interesting that requires a deeper dive. But fundamentally, my job as a trader is to study myself and then study my reactions to the market, right? And determine, is it me? Is it my strategy? Or is it the market? 95% of the time, it's me, right? I'm the one making my life more difficult for myself. So then it's about reflecting on how I can improve or change those things and kind of get back to where I'd like to be. So, Mike, you asked an interesting question. Would you sell puts below 270 to make money while you wait? No, we weren't allowed to do that. Like the way that like we had honestly, it was just too many other orders going on, right? So it was a fund that had like $11 billion AUM, and I would get 60 instructions a day or whatever it is on executing trades. So if I was waiting for Apple to pull in under my entry price, I'd be working on an Amazon order or a Microsoft order or whatever it might be. So I wouldn't have time to do that. Like I would never be assigned just one position. You'd be getting emails, like every 2-3 minutes with updates and changes and whatever. And so you just didn't have time to do those things. Yeah, even when I was there, we didn't really trade too many options. We had a few option strategies, but they were a very, very small percentage of our of our trading style. And it wasn't something that I was a part of. So I traded, I was on the US equities desk. And primarily I was on the US equities desk because I was a North American living in the UK. So I was given the North American desk because I could speak the same language effectively, right, as your brokers in New York. So that was probably why, like honestly, more than anything, why I got assigned to that desk instead of work in Hong Kong or Europe or whatever. It was because I could banter with the brokers about how shit the Giants are or do little things like that. So much of what your job as an institutional trader, it's actually like relationship management, dealing with brokers, getting corrections on fill, finding locate, which is just borrow, renegotiating commissions, running tests with them, a lot of this kind of stuff. So a huge part of what your job is as a trader is to be like the connections man, and build relationships, go on dinners, do that kind of stuff. It sounds fun. It's more boring than you think, but every now and then you'd get a pretty wild brokers night out, and that would be a good perk. All right, so we're possibly getting a setup here for a breakout to the downside, right? It's a breakout through new low of day. And so we'd be targeting a move towards 25,900. As long as it closes below 79. Did not. The asshole. So we'll try this on the 5-min, has a chance there. So I probably, I don't know, it's a really good day. I don't think I'm going to place any further trades here, all things considered. But I want to give you guys kind of like two things, I guess, to focus on, right, or to take from today's session. So talked about this a little bit yesterday, but I think it's worth expanding on a little bit more here today. But belief happens before ability, right? So you have to believe in your ability to execute a trade. You have to believe in your ability to be disciplined. You have to believe in your ability to execute the strategy. You have to believe in your ability to follow your rules before you're going to ever do them. So it very much is one of those things where you can because you think you can. So it's really important to me, especially when we choose like the language we use to describe our problems, right? And how we talk about our trading. Too many people use like boogeyman language where they're like, oh, like I'm never going to be disciplined, or I'm never going to be this, or I'm never going to be that, or I'm never going to follow my rules. I don't know why I keep doing them. And those are phrases or statements that come from an area of disbelief, not belief. So you're almost like giving yourself permission, right, to do those things when you don't really want to, but because you believe that you're stuck in that feedback loop, you're going to remain stuck in that feedback loop. And then I've talked about this book in the past plenty of times. Like I said, probably my favorite book of all time, but it's Man's Search for Meaning by Viktor Frankl. There's a great line in there that I think that really applies to trading. So the quote is, between stimulus and response, there is a space. In that space is our power to choose our response. And in our response lies our growth and freedom. True freedom begins in that stillness, in the ability to choose rather than to react. And I think that that's very important as a trader, or a very important mindset to adopt as a trader, understanding that we have control over our impulses, over our reactions, that those things are actually something that maybe we're even subconsciously choosing to do, but that understanding that freedom and discipline and believing in yourself starts with choosing to take accountability over that moment of stillness, right? In that brief microsecond where you have the choice to go left or to go right, or to go towards the path that you want, or to go towards the path that you're dreading. Most people end up getting addicted to chasing the path that they're dreading. And so they ignore that moment of stillness and they pursue that impulsive decision. If you want to be a profitable trader and you want to maintain an element of consistency long term, then learning how to control that reaction or noticing that important moment is going to have a bigger catalyst and a bigger improvement on your trading than pretty much any technical reason or strategy or whatever, right? It's learning how to remain in control even when it's uncomfortable that has the largest correlation to how successful you're going to be. And it is really the most important thing that we can hopefully take from traders or other traders, right? Other successful traders, other successful business people. So in any element of life, I think it's the person who remains in control of their emotions and can remain rational when they don't want to. That person tends to win at whatever game that they're playing, be it athletics, be it professional, be it academic. And we just have to learn how to find those things in our own trading and build out from there. So I don't have too much else to say here today. Feels like it's been a pretty good day. Got a nice up and down, a lot of good trading action. 8 trades, good amount of them. Made a few mistakes, made a few really amazing decisions, but more good than bad. And I'll be happy to keep compounding that as my voice cracks. So final call for questions here, team. Any questions? Hopefully everyone had a good day as well here. Congrats, Kellen. Enjoy. Yeah, you too, Jerry. Sounds good, Clint. You enjoy the rest of your day. Ah. All right, guys. So final call for questions here. Final call for questions. I'm getting Discord ads. That's so bullshit. All right, guys. Well, if no further questions, then same deal like always. If you have any questions, hit me up outside of market hours. I will do my best to get back to you as soon as I can. But back to being a straight line in the P&L, which I think is really fun. The sweet spot there as a trader. And we're absolutely rocking and rolling here. Been an amazing month. Favorite time of year to trade. So Q4 is always my favorite. Maybe next year I'll just trade Q4. That's a joke. But have yourselves a great day, team. And I'll catch up with a few of you here in our one-on-ones later this morning / afternoon. And otherwise, have yourselves a great day, and we'll talk soon.